Troy with the Reichert Mortgage team, bringing you that mortgage market moment that you've been waiting for. I appreciate you stopping by and checking this out. Always trying to keep you informed on what's going on in the residential mortgage market, where interest rates and monthly payments are trending. And we got some good information here for you again. Before we get to it, please do me a favor. If you like the information in here, please like this video. It helps those algorithms out. And I would love for you to share this information with somebody else that might find value in this as well. And please, please, please subscribe to my YouTube channel. You'll be right there. Just hit that subscribe button. You're going to get this information and some really good tidbits later on down the road in the future about what's going on in the mortgage world that might be of value to you. Now, as a reminder, we are a broker, so we have many different loan options beyond the ones that we're going to be talking about here. We're going to be chatting about conventional VA, FHA, like we always do. Our scenario is, on a primary residence. Oh, I apologize. Before we get to that, interest rates do indeed change at least daily, if not multiple times a day. So please timestamp this as of 08:30 in the morning on the 13th of June, 2024. Now, as I was saying before, our scenario is as follows. It is a primary residence, 30-year fixed on these types of loan products as well. $450,000 purchase price. We do fold in $175 each for property taxes and homeowners insurance, just so we can kind of get a really good idea of what an estimated monthly payment might look like. Each house is going to be different out there, you know that, but again, we try to make it as reasonable as possible. No HOA in this particular scenario either. So without any further ado, we're going to get started on that VA purchase. 660 credit score, no money down, 6.125 on that interest rate. APR, depending upon where your financing fee is for your VA funding fee, is 6.173 to 6.483. Estimated monthly payment on that, 3,084 and change to 3,174 and change. Again, if you're financing that VA funding fee, if you have one at all, it's going to change both your loan amount and your estimated monthly payment. So we want to make sure we got that squared away for you. As well, conventional purchase, 740 credit score, 10% down, 7.125 on that interest rate, 7.311 on that annual percentage rate with an estimated monthly payment of 3,139 and change. FHA, we mirror that credit score at 660 for you on that credit score, 3.5% down, which again is the minimum amount on almost all loan products for FHA. 6.125, which again matches the VA in this instance on that interest rate, but the APR is higher, 6.889 APR. FHA almost always has a higher APR because you have an upfront and a monthly mortgage insurance on that product. Still a great product to get you into a home, but that APR is indeed higher on that. 32 and change is your estimated monthly payment there. Now, where are we today in comparison to the last mortgage market moment that we did? Well, we are indeed slightly lower. Why is that? Well, over the last week and a half, we've gotten some economic data that shows indeed that some of the economy is slowing down in the way that the Federal Reserve is looking for. In fact, the Federal Reserve just met recently and had a press conference, and their forecast regarding the number of rate cuts that we might see this year has gone down a little bit. So while we have seen some good movement as far as slowing that inflation down, if you dig a little bit deeper, it looks as if some of that isn't going quite as quickly as the Federal Reserve may have anticipated at the beginning of the year. So instead of having 2-3 rate cuts in 2024, looks like if things trend in the way that it has been recently, might only see one rate cut. Now, that might be a quarter, it might be a half, might be 75 basis points on that Fed fund rate, but they are starting to kind of slow that down a little bit as far as what they're seeing right now. Remember, the Federal Reserve only changes interest rates on the Fed funds rate, not mortgage rates, but it does indirectly affect mortgage rates for sure. So let's do this. Let's have that conversation together. Let's talk about what you're looking to do, whether it's refinance to access some of that equity in your home. If it's looking to, let's say you bought recently and the rates are indeed coming down to a spot where you think that the would be an advantage for you to lower that monthly payment and lower that interest rate, we can absolutely look at that for you as well. You're in the purchase market. I promise you the numbers bear this out. If you are looking to purchase a home, then you want to definitely put that information in front of you early while interest rates are indeed a little bit higher. We don't want all those buyers flooding the market and then you're paying extra for a home potentially because once buyers hit the market, supply and demand says that it's going to be more of a seller's market, all other things considered, right? We got to look at that as well. But I am your loan guy, Troy with the Reichert Mortgage Team. Appreciate you stopping by. Have a blessed day. Take care.